Everyone wrote off Intel years ago, outdated and falling behind TSMC in the global chip race. However, behind the scenes, Intel has quietly been building back something that can flip the entire global chip game. And it's not just about chips, it's about AI dominance as well as national security. So be sure and like and subscribe down below and watch all the way to the end. I'll show you the live trade. I'll actually place the trade on the trading platform in this video, and you'll see exactly how to profit huge going forward. For over a decade, TSMC has been the undisputed king, powering everything from iPhones to AI servers. Meanwhile, Intel, once the pride of Silicon Valley, fell behind, missing deadlines and losing ground to Taiwan's chip powerhouse. But in 2025, the story is changing. Intel isn't just trying to catch up. It's trying to leapfrog TSMC with a U.S. manufacturing comeback powered by government support, new technology, and an audacious vision. What's happening right now could impact every major AI company, every U.S. investor, and the future of global tech dominance. So how is Intel fighting back from previous failures? Well, not long ago, Intel was the gold standard, the company that defined Moore's Law. But its 10-nanometer delays and missed deadlines gave TSMC the window it needed. While Intel stumbled, TSMC sprinted, locking down Apple, Nvidia, and AMD. By 2020, TSMC was years ahead. Analysts said Intel's comeback was impossible. Then, in 2021, Intel returned with one mission: bring back the crown. The plan? Rebuild Intel's entire process roadmap and prove that America can still out-engineer the world. That plan, 5 nodes in 4 years, is insanely aggressive. But if it works, they won't just catch TSMC, they'll surpass them where it matters most, in the US, on the home turf. Let's discuss Intel's multi-billion-dollar fab revolution. Intel's comeback isn't just talk. It's being built right now across America. The company is launching one of the largest semiconductor buildouts in history. In Arizona, Intel's $20 billion expansion rivals TSMC's own fab down the street. In Ohio, a new silicon heartland is forming. And in Oregon, advanced R&D is powering the next generation of chip nodes. Together, they're part of IDM 2.0, Intel's new model that merges design, manufacturing, and foundry services. And under new CEO Lip Bhutan, that transformation is accelerating fast. Tan's sharpening Intel's dual mission to build the most advanced U.S. fabs and lead the next wave of chip innovation. He's reviving Intel's engineering-first culture, cutting red tape and empowering teams to design faster, smarter, and closer to what customers actually need. His goal is clear: a flexible, secure, U.S.-based supply chain that attracts more customers and proves America can still out-engineer the world. If it works, Intel becomes the go-to foundry for AI and cloud chips made on American soil. So, what is the government's role in Intel's build-out plan? Well, Intel's plan is ambitious, but this time, Washington is all in. The CHIPS and Science Act unlocked $52 billion to rebuild America's chip industry, and no company benefits more than Intel. Those funds mean tax breaks, subsidies, and massive federal backing, because this isn't just an economic bet, it's a national security mission. Over 90% of the world's most advanced chips are made in Taiwan, just 100 miles from China. That's a risk the U.S. can't afford anymore. Intel is now being positioned as America's chip champion. Every dollar of CHIPS Act funding says the same thing. The world's most advanced chips will be made in the United States once again. So, how will Intel fare in the race against TSMC? TSMC still leads the world in 3-nanometer chips, Apple contracts, AI dominance. But the battlefield is shifting. TSMC's Arizona project is struggling, delays, cost, and cultural clashes. Meanwhile, Intel's U.S. advantage is gaining momentum, local labor, full political support, and new high EUV technology. Those next-gen tools could push Intel ahead, straight into angstrom-class chips before TSMC fully scales its next node. That's like jumping from 4G to 6G while your rivals still fine-tuning 5G. With AI demand exploding and companies desperate for local chip sources, Intel's timing couldn't be better. Every TSMC delay in Arizona is another chance for Intel to win, because this race isn't just about performance. It's about trust, supply, and security. So what does this mean for Intel investors and the future of Intel? Well, whether Intel passes TSMC or not will come down to execution. But this isn't the same Intel from a decade ago. It's fighting with urgency, focus, and government backing. For investors, this race defines who controls the foundation of the AI economy and who captures the trillions in value built right upon it. If Intel succeeds, it could spark a U.S. chip renaissance, reviving suppliers, creating jobs, and giving America leverage it hasn't had in decades. But if it fails, TSMC's dominance will only tighten. Either way, it's more than just a business rivalry. It's a race for the chip crown that will define the next global power. All right, guys, here we are on the Tastytrade trading platform. It's a brokerage, full service, my favorite for trading options. There's a link down below. Check it out. There's benefits if you go through my link. All right, so we're going to punch in INTC in the upper left here. We can see that it's down 1%, so actually good time to put this trade on right now. I love Intel long right here with the government backing, so I think it's going to kill it, and we'll take advantage of it by doing a poor man's covered call. So let me show you real quick. INTC, and then we're going to open up the trade page. I'm going to go out. I've actually already got one on. I'll show you right here. A deep in the money leaps and then a short call against it. But let's go back to the trade page. I'm going to open up the December 2026, so 415 days to expiration. I like to go out about a year, and let me show you the difference between the September and December, 324 days to 415. But if you look at 415, we go right at the money. I like to go just in the money, so $40, and the cost, the mid price is $11.20. So one option contract controls 100 shares of stock. So we multiply that times 100, and that's $1,120. Now to buy 100 shares of stock outright, it would cost $41.12 times 100, or $4,112. So basically a quarter the price to do the Leaps option. Now, just like owning the stock, this is what I love about the Tastytrade platform. You can see right here, as the stock price increases, we make money just like owning the stock outright. All right, let's go back to the table mode, and we've got the 40. Oh, I said I would show you the difference between September. So if we hit here on the time right here, the expirations, and go back, we go the 40, 324 days, and it's 1035. So here's why I'm going out even further, is it's only $100 difference. It's, let's see, $11.20 for, up to 415 days from 324. So almost 100 days for $1. So to me, that's a no-brainer. So I like the 415 days to expiration. Now, if we close that up, what we're going to do is sell a short-term call against it. So this is just like a traditional covered call, except instead of purchasing the 100 shares outright, we're using the Leaps option. And that's okay. It's not going to cost us. It's going to be much less buying power. You can see right here, buying power, $1,120. Now, it's going to be reduced by the amount that we collect on the short call against it that we sell. So I'm going to go out to December, and I've got the 45 short call against my Leap now. We're at 41. I'm going to give it a little bit more room and try to collect $2, which is really $200. So we can go out to the 47 or 48. 48 is going to give us, it's the 32 delta. So that's basically a 68. You subtract that from one, it's a 68% probability of profit of it staying under that $48. But if I can collect $200 every month, this $1,000, because it's going to be reduced by $200, so this is going to drop down to $900. It's going to be paid off in 5 months. And then we own, or we control 100 shares of stock for free, and we can make $200 a month going forward on that. That's the thinking, theoretically. So, and it works. But if we go to the 48, we're going to click on the sell. So calls on left, puts on the right. We're in the calls. We bought the lead. Now we're going to sell. So we go to this second row over, bid, sell, and the 48 strike, and click on this, $1.93. Watch the price drop. Boom, $9.15. So I'm going to go ahead and review and send and place the trade and see if we get filled. No. So we're going to adjust it real quick. No problem. Replace. I'm going to pay a little bit more just to get filled right away. We'll go up to 920. Yikes. Intel's normally super liquid. Yeah, there's 27 million shares traded, so it shouldn't have to go too much more. Let's up it a little. 925. Huh. Yikes. Here we go. Let's just get filled. 930. All right, 930. All right, guys, let me know in the comments below. Is Intel going to overtake TSMC going forward and continue to go up in price like it has been recently? Let me know in the comments. Also, remember to like and subscribe down below. Download the free options workshop as well. There's also a paid course if you want to level up your game. And if you like this video, be sure and watch this next one.